All right. So, last section of chapter 10.3 is going to be bank reconciliation. Okay? What is a bank reconciliation? Well, when we tend to have our own bank account, right? We do our transactions, we're constantly charging things, whether it's on our debit card, we're writing checks left and right. What we need to do to make sure that the bank is also keeping track of our transactions is we need to know which transactions have cleared and which ones are still pending, because especially when we write a check out, right? The way the money's taken out from our bank is when the recipient of the check cashes out their check or deposit into their bank, right? And we all know, right, with checks being available, right, because the best way to keep track of a business transaction is actually using either a debit card or an actual check. Now, if we actually know this factor, right, checks can be valid up to 6 months, okay, upon the actual date that it's available. So that means whoever's the receiving end, right, has a total of 6 months to actually process and put into their books or into their bank, right? So that means our assumption is that just because we say that we wrote the check out, that doesn't mean that money has been taken out from our bank account, right? A lot of different businesses deposit their checks. They could deposit every day, or they could choose to deposit at the end of the week or the end of the month, depending on what kind of business that you're dealing with, right? So most cases, when we talk about having checks as a form of a transaction to keep track of transactions, this is exactly why we must have our bank statement, okay? Because the bank statement's going to tell us exactly which transactions have completely cleared and which transactions are still pending, okay? So that's where at the end of a given accounting period, right, we must adjust our bank account to our bank statement so then we can kind of follow the lines too. We circle on our end the checks that we've written out, right? We have our own check register. This is our way to keep means of track of our money by how many checks that we've written out. So in this case, we have our own check and balances method as well, where on our end, these are all the dates that we wrote the checks out for. These are the check numbers that we used, and these are the vendors that we paid or whoever we paid and the amounts that we paid. Now, this is where we need to check mark our bank account because, again, we can't assume that just because we send out the check, right? If we're especially mailing out a check, how many days does it take for the post office to actually mail out? Especially if you do Sunday, right? If you send out things on Sunday, they won't even pick it up until Monday. So then there's 2 to 3 business days depending on which state you're sending it out to. And if the post office is backed up for some reason, then you can assume that your check is going to be delayed even further. And on top of that, not only that, it also depends on when you deposit the money into your bank, right? If it's on a weekend, it won't process until Monday morning. So there's so many rules, especially when we write a check out or in terms of a financial transaction, right? The thing about checks is it does actually move a lot slower than you think, okay? Because if it takes 2 to 3 business days to send out the check, and it takes 2 to 3 business days for the person to put it into their bank account, depending on when they receive it, right? Then you can assume that you have a whole week period in between where that cash is not taken out from your bank. So any check that you write on the very last day of the month, you can guarantee that's not going to clear until the next month, okay? So this is where we need to do our checks and balances, right? Because in our records, we said that we took the money out. But in reality, the money never came out of our bank account because it hasn't been processed yet. The other person hasn't put it in their bank account. It's still pending. So this is what we have to do to make sure that our bank account matches our check or our cash register at all times, okay? So our checking ledger, okay? So that's what it meant. The checking ledger account, okay? So usually, typically, every month, right, you're always going to get a bank statement. And usually this is the perfect way to actually adjust your books every single month, because you have a time period in between where you're given a statement, which is a proof of a transaction, and comparing it to your own books. Now, because we know in our books, right, we could say, I paid for this, I paid for that, I deposited this, I deposited that. But in reality, the bank has to clear that and give you the okay to be able to say, yes, all right? Yes, you were able to do it, okay? Now, with that being said, bank statements are usually going to give you your beginning balance of what you started out with, your ending balance as of that month, right? So it's a monthly statement, right? It's going to give you a list of all the deposits that you've made with all the checks that have cleared, right? And it's also going to be giving you a list of anything that you get charged. So, for example, right, if you use the bank for business, right, and you're processing a lot of stuff, whether it's you know, a business loan, or you're using it to print out checks for you, whatever kind of services you use, usually oftentimes they're going to charge you money for using their bank for services, okay? Other key factors could be anything that, in case, let's say you didn't have enough money and the bank decides to push forward and pay for you in advance, that's going to be considered an NSF, non-sufficient funds. Okay, so if you write a faulty check and they said, well, it's only for $10, and they passed it on through, right? They're going to automatically charge you because, one, you didn't have enough money in your bank. Two, you overdrafted your bank. And three, that's money that you owe the bank now. Okay, so there's a lot of fees and regulations when it comes to working with the bank, and that's typically one of them. If for any reason your customer sends you a check and you submit it into your bank, right? And that check bounces, you get charged because you deposited a faulty check into the bank. You said that you had money into the bank, but it ended up bouncing. So you get fined, and the customer gets fined too. So that's a two-way transaction, because it took them processing hours to process that check. And because it didn't work, they charge you for that. So there's a lot of different reasons that you can do that, right? If you go to the bank and you overdraft, you pull out too much money, you get automatically charged. Okay? So there's so many rules in regards to doing business with the bank. Okay? And those things can happen. But of course, that will appear on your bank statement if those things occurred. Now, will you be notified that you wrote an NSF check? You could, if you linked up your bank account, right? If you do online banking, or if you do have it send through text message, then yes. But if you don't have any of those things set up, then you won't find out until you get your bank statement. Okay? Other things that you can do too is, if you are accepting electronic funds transfers, right? We have what's called an auto clearinghouse. Auto clearinghouse is where you can collect money for people who use a different form of payment. So if they charge via electronic funds, right, you can collect it through ACH. Okay. Other things too is that, again, for those who you finance their amount that they have, let's say accounts receivable, right? You charge your customers a specific percentage, right? A convenience charge for interest, right? Because they decided to finance their amounts to you. If that's the case, right, then that's going to be considered interest that you're collecting, and that's income to you. Okay, ACH could also be any convenience charges. So if they choose to use an EFT transfer, right, you can set a charge saying, well, because they choose this form of payment, I'm going to charge them for the convenience of using my bank account to have to transfer those things. Okay, nowadays it's a little more easier, right? It's free. But again, because you're the business, right, you can set that up any way that you want to do it, okay? So if someone wants to pay via online with a credit card, that's going to be considered an ACH. If they to pay, and then if they're paying again using their bank card, and you charge of interest on top of that, that's interest that you're collecting on top of that. Okay, so again, the bank is doing a lot of work for you to calculate all this stuff for you and manage the stuff here as well. Okay. And of course, you're going to be looking at your cash ledger account, the cash ledger, checking ledger, whatever you want to call it, as long as it's a ledger that keeps track of the money that you have in either your bank account or just your cash in general, okay? So this is your books. This is you keeping track of your transactions, okay? Now, and again, because 95% of accounting errors are human, you can definitely expect that us as keeping our bookkeeping records, right, we're going to make more mistakes than the bank would, okay? So in this case, right, we might forget to record that we received a check, or we might have forgotten to record a deposit, right? So in this case, you can't really trust us as our books to be the perfect ledger account, right? Because humans, we make mistakes, we forget to enter things left and right. But this is our way that we keep track of the money that is in our bank account. Now, of course, if I'm writing checks left and right, and I'm updating it as soon as possible, right, that means whatever amount of money that I have in my cash/checking ledger account is obviously not going to be the same as your bank account, because the assumption that if you write checks out, it takes 2 to 3 business days to send it out, and it takes 2 to 3 days for them to process it on their end too. So in this case, right, even our ledger isn't accurate because we assume that the money's already taken out when it hasn't been taken out. Okay, so this is our ways that we keep track of our cash on our end. Okay, is this a question? Okay.
Oh, sorry.
Yeah.
Yes.
Okay. So when we finally receive our bank statement, right? This is what a bank reconciliation does. It compares the bank statement to what our actual cash ledger says, right? It allows us to do some checks and balances ways to make sure that we are on the same page, okay? So how we're going to compare and contrast, right, is we're going to take a look at what the bank knows versus what we know, okay? So let's focus on the bank side here, okay? On the bank side's end, right, what do they know that we don't know, okay? Or in this case, what do we know that the bank doesn't know, okay? That one, okay? So if I focus on the bank side, what do we know that the bank does not know, okay? So in this case, right, we're going to start off with our ending balance that's on the bank statement, okay? We're going to add any deposits that are currently in transit, right? So that means we know on our end that we deposited all this money, but the bank doesn't know that if you deposit on the last day or at 10 o'clock at night, right, when the bank is closed, they will not know that. They will not recognize it until 8 o'clock in the morning, okay? And if it's a weekend, they won't recognize it until Monday morning, okay? So then a deposit in transit says that, well, we don't know that you deposited money. So that means on your books, you said that I have money. And on the bank side, we don't know that. It's currently in transit. Okay? And then you're going to subtract any outstanding checks. So outstanding checks means checks that were written out that has not been processed yet. So I was talking about, right? On our end, right, we know we wrote all these checks and we took it out of our checking account. On the bank side, right, we don't recognize those checks unless they are processed and they are cleared. So if you wrote a bunch of checks and your recipient of those checks haven't received it yet or haven't put it into the bank yet, how does the bank know that? The bank will not know that because it's not been processed yet. So in this case, that is why the bank is going to say, well, I don't know that you have a whole bunch of outstanding checks. So that's what you're going to recognize here. All right. And then at the very end, you're going to get a new adjusted ending balance. Okay. And this should match whatever is going to be on your cash side. Okay. Now in context, let's see what the cash side does. So in this case, when we're doing our books, what does the bank know that we don't know? Well, the bank knows that they charged us for all these fees and all those fees and NSF charges, service charges. They know that for sure. But they also know how much interest that we've collected, right? We don't know that. So that means when you're looking at on the cash ledger side, right, we're going to start with our ending balance. Okay, we're going to add any interest that we've earned, any auto clearing houses that we've earned, right? And we're going to subtract any fees that the bank has charged us, because on the bank side, they know they did this to us. They know they collected the interest for us. They also know that they charged us. Well, we don't know it. So in this case, that's why we have to update it this way. So we're going to update the interest that we collect and subtract any fees that had happened for service charges, NSF checks, return bounce checks, whatever reasons that you got charged for those transactions, okay? And then at the very end, you're going to get another adjusted ending balance. And at the end of the day, just to make sure that both sides end up being equal to each other, that is when you know that you did your bank reconciliation successfully, okay? So let's go ahead and dive into the example here in this little in our slideshow here, okay? So again, we have the bank side on the left and our cash side on the right. In this case, I'm going to go ahead and do the bank side first, okay? Because, we'll just go left and right. But in this case, right, when we do our examples, you can choose which side you want to do first, okay? So the bank side, right? First thing we got to do is we got to grab our ending balance, and that's going to be located on your bank statement, right? Usually at the very top of your bank statement, you'll have your beginning balance of what you started for that month, and then you're going to have your ending balance, what you started at that end of the month. So then here you go. My ending balance is $9,446.40. So I'm going to pop that number in there, okay? First thing I'm going to recognize is what are my deposits in transit? So what are the money that's supposed to be coming in to the bank? Okay, so let's take a look. Okay, and where I would find that would be looking at my deposits section in my bank statement, and I'm going to compare that to my cash ledger, right? Anything that's a positive number is usually going to be some kind of deposit, right? Or if you have a actual deposit slip, usually that's going to give you your reference point of your track record there. Okay, so in this case, here's my table here where I have a bunch of deposit slips. Okay, and in this case, I made a total of 2, 4, 6, 7 deposits. Okay, I made a total of 7 deposits. Now let's go ahead and compare my bank statement. How many deposits actually cleared out? In this case, 2, 4, only 6 deposits cleared. So in this case, now you have to compare which one cleared and which one has not yet cleared. Now again, rule of thumb is if you do tend to submit things very last minute at the end of the month, it usually won't clear until the next day, or depending on what it is, right? If you do it during the day, then it should clear right away. But usually it does take 1 to 2 business days to clear a deposit. Okay, so in this case, right, my first way I should be by looking at my last date that I deposited. So in this case, I deposited on May 30th for a total of $254.52. Now let's look at my bank statement. The last deposit cleared on May 30th, but it was for $92.25. So automatically right there, you can look at your deposit slip numbers because that can also help you too. In this case, I'm missing my deposit slip for $44.27. So in this case, right here, I automatically know I'm missing $254.52, right? So that means I'm going to pop that in there. This is my deposit that is in transit. As in, on our end, we said we deposited, but on the bank's end, it's still processing. It hasn't cleared out my deposit. It's currently in transit. So this is what I'm doing. I'm going to add the $254.52. Okay. So now the next step here is going to be subtracting out any outstanding checks. So on the bank side, right, I'm going to take a look at all the checks that have cleared. And then on our end, we're going to take a look at our check register, okay? And we're going to compare and contrast which checks have cleared and which ones has not cleared yet, okay? So in this case, best way to look is using the actual check number. So in this case, check 125, 126, 127, 128, 129, and then it jumps right to 131. Okay, so let's take a look on our end. We wrote 125, 126, 127, 128, 129. We're missing 130 because it jumped from 129 to 131. So automatically, that also tells me my discrepancy here is there's a missing number here. So I'm missing check number 130. Okay, and of course, on our end, we went beyond 131. We wrote 132 and 133. So these three checks are things that are going to be outstanding checks. They have not cleared yet onto the bank, or when we send it out, the person hasn't received it yet. Okay, so in this case, right, I have check number 130 for $846.52, and I have check 132 for $1,125.22, and then I have check 133 for $245.22. Okay, so I'm gonna pop all those in there because these things haven't even cleared out yet. So therefore, that's not something I need to take out from my bank, okay, or that's something that I need to take out from my checking account. Because they're going to clear the next day, okay? So here, now we got to do our calculation. We're going to start out with $9,446.40. We're going to add our $254.52, right? And then we're going to subtract out our $2,216.96, all right, to get a new adjusted ending balance to be $7,483.96. Okay, so that's our adjusted amount here. Okay. So now let's go ahead and deal with the cash side, or our side, the ledger side. We need to know how much our ending balance is in our cash or checking account. So this is what you normally would see when you are in your ledger account. You're going to see at the very end of the month, at the very last line, right, with the account balances, right, this is your ledger account. You're going to have a total of $7,338.96 in your, currently in your ledger account, okay? That's what you're ending with, okay? First thing you need to do is you're going to add any interest. So if the bank has collected interest for you for any, online payments, whatever it is, right? It should be listed on your bank statement. So in this case, you're going to add your interest of $15, and you're going to add your ACH, which is the auto clearinghouse, for $215. So, pop that number in there. So that means you're adding a total of $230. Okay. Then you're going to subtract any fees that you've occurred, which should be at the very top of your bank statement, should give you all the fees that happened during the time. So in this case, you had a service charge of $50 and you had a return check fee, okay, for $35. So in this case, I pop that in there, and now I have to subtract a total of $85, okay? So let's do the math here. $7,338.96. You're going to add $230, and you're going to subtract $85. And you should get a grand total of $7,483.96. And guess what? Both sides match. All right? And there it is. If they match on both ends, then that is that means you did the bank reconciliation correct. Okay. Any questions here?
No.
Okay. So then, how do we journalize this? Because we need to update our ledger accounts by journalizing what has happened. So in this case, you're going to take money out because you had to, you're going to add money in because of your interest income, right? Your ACH and your interest, right? That goes towards your checking account, okay? So you're going to add the $230. But the things that you had to pay were bank service charges, okay? So bank service charge is going to be an expense that you had to occur for getting the bank to work with you, okay? And that's going to take away from your checking account for the $85. Okay? Simple. This part's easy, the easy part here. Okay? So again, chapter review. Now this is what I want you to do. Okay? So let's focus on the right side first, okay? There was simple interest and compound interest, right? Then you have the variables here of the PRTNN, okay? And the simple interest, once again, to solve for interest is P times R times T, okay, equals I, so pretty. Your future value is your principal plus your interest. Where compound interest, right, the formula for future value is P plus 1 plus R, 1 plus R over N to the N and T power, okay? I also give you the little Excel calculation here as well, that this is what you got to punch into Excel in order to calculate compound interest, okay? And interest is always going to be equal to future value minus principal, okay? On the left side, to make it easier for you to remember this, right? When you're dealing with the bank side for bank reconciliation, you're always going to do, okay? So the bank side, you do, right? And that's going to be, you're going to add your deposits and subtract outstanding checks, okay? Where on the cash side, you're going to always have ifs, okay? Which just means you're going to add your interest and you're going to subtract your fees, okay? At the end of the reconciliation, your adjusted amounts must match. If they do not match, then you have something further to have to add into between either the cash or the bank side, okay? So bank side is your dues, your cash side is your ifs, okay? If you can memorize that, then that will be the easiest. And what I'm going to test you is your dues and your ifs, okay? But for the example here, I'm going to be, doing something a little, a little more challenging here, just so that you understand that bank reconciliation it can be easy, but it can also be one of the trickier things too. Okay. So let's go ahead and dive into the exercise here. Okay. So I have 2 exercises available. So let's go ahead and let's take a look at problem number 1. Okay. So here I have a bunch of checks, copies of checks, okay? For this case, I think you can ignore them. They're only there to prove that your transactions are, or, proof that a transaction has happened by a copy of the check. Okay? You have your bank statement right here, okay? In this case, I give you a cash ledger. So this is your ledger account. I also give you your deposit slips as well as your check register, okay? And we're going to do a reconciliation, okay? So in this scenario, which side do you want to do first? You want to do the bank side or do you want to do the cash side?
Let's do the bank side.
Okay, let's do the bank side first, okay? So again, when we start off with our bank side, right, we need to have our ending balance in our bank. So let's go ahead and find what that number is, okay? So again, here's your bank statement, okay? What is the ending balance in your bank statement?
1,055.
1,055. So 0, okay? 1,055, okay? What is the first thing you're going to add? Okay, if you remember your dues, what does the D stand for? Okay, we're doing our bank statement first. When we do this, right, we're going to add our due or our D. What does the D stand for?
Deposit.
Deposits. Good. So let's take a look. So we have on our end, right, we have our deposit slip / register right here, right? In this case, how many total deposits did we make? Okay, so here we collected our money here. So on August 4th, we deposited money for $100. On August 11th, we deposited $350. August 18th, we deposited $400. August 25th, we deposited $225. And then August 30th, we deposited $30. Okay, so 1, 2, 3, 4, 5 total deposits. Now let's take a look at our bank statement. So here's our deposit section. Here, how many deposits have cleared?
4.
Only 4, right? If you remember, 100 was there, 350, 400, 225. Which one am I missing?
The last one.
The last deposit, correct, for $30. So if you want to highlight it, go ahead and do so. So in this case, I'm missing my $30 deposit. So I'm going to go ahead and put here, right? You could put deposit, okay? And it was for $30. Okay, so that's what you're going to add. Okay, if you want to, you can calculate that right now, but it's just much easier. You don't have to do too many calculations if you just do it all in one go. Okay. Now, what do we need to subtract? What's my O?
Your outstanding checks.
Your outstanding checks. So let's take a look at my check register. Okay. I wrote check number 101, 102, 103, 104, 105, 106, 107, 108. Okay. And let's check out my bank. Okay. Check number 101 cleared. Check 102 cleared. I have a discrepancy. Where did check 103 go? Okay. I have check 104, 105, 106, and 107. So I'm missing 2 checks, right, for 103 and 108 because I wrote 8 checks and only 6 cleared. So check number 103 was for $20. Okay? While check number 108 was also $20. Okay? So I'm going to go ahead and plug that in here. So check number 103 and check number 108 was both for $20. Okay, so therefore, I need to subtract out $40. Okay, so let's go ahead and do the math. If I started out with 1055, I'm going to add 30. Okay, so I should give you 1085 minus 40. How much should you have at the end of the day?
$10.
10.
Negative.
Okay, I see what you said. You decided to have 1045, right? I see what you did. You got $10 from the difference between adding your deposits and your outstanding checks, right? The difference between here is $10. Now, are you going to add or are you going to subtract $10? subtract. So $10.55 minus $10 is going to give you $10.45. Okay? Now, you can't stop here because you need to make sure that your cash ledger matches you the $10.45. So let's go ahead and take a look. I need to figure out what my ending balance is in my checking account. So here, cash ledger, okay? Let's take a look. My ending balance is
775.
I meant to highlight that, not make it red. Okay, yes, $775. Okay, oops. Okay, $775 is my current balance in my checking account. Okay, in this case, I need to add what? Okay.
Your interest.
I have to add my interest, okay? So that includes ACH as well. So let's go ahead and take a look at my bank statement. Where can I find my interest? All right, credits. I have ACH and interest right here. Okay, so I have ACH for $250 and I have interest to collect for $50. Okay, so that means those are the two numbers I'm going to add to my statement here. So ACH for $250 and my interest was $50. So therefore, I'm going to add a total of $300. Okay. So then, what do I need to subtract out from my checking account? Your fees. Good. So let's take a look at what the bank charged me. Okay. Like I said, it's usually at the top of the bank statement. So here you go. Right? You got charged for a service charge and you wrote an NSF check. So in this case, this one right here says NSF. Now in this case, right, the check still cleared. If it was a bounce check, it would have put it up here saying you wrote a bounce check and that you owe this much money, and you wouldn't have $1,000 in your bank. You would have significantly less. So in this case, the bank processed it for you, and just because it was only $10. So in this case, then I got charged for services for $20 and an NSF for $10. Okay. So less service, okay, for $20, okay, and my NSF was $10. So therefore, I need to have a negative $30. Okay. So in this case, right, let's start up from the very beginning. If I had $775, okay, I'm going to add $300, okay, and I'm going to subtract $30. So what is my total adjusted ending balance?
$10.45.
Correct, $10.45. So in this case, both our ledgers match. My ledger matches my bank account 100%. So that means I am done with this exact scenario. Okay. All right. Any questions so far?
No.
Okay. So again, this is what I'm going to be testing you on. Okay. I'm going to test you on your do's and your ifs. Okay. Exactly like this. Okay. So you'll see a very similar scenario. Okay. So then let's go ahead and do problem number 2, or in this case, it's problem number 4. Okay. So again, here are your proof of your checks being written out. Okay. Here you have your bank statement. Okay. Here is your cash ledger. And again, here is your check register as well as your deposit slips. Okay. And let's go ahead and which side do you want to do this time? You want to do the bank side or do you want to do the cash side?
Bank.
Let's do bank first, okay? All right, first thing first is we got to start out with the total amount in our bank account. So let's take a look at my bank statement. What is my ending balance in my bank statement?
The 24.
24.
472.
24,594.72. Okay. Okay, 24,594.72. $24,594.72. Okay? Good. What am I going to be adding first?
Your deposits.
Your deposits, okay? So here's your deposit slips, right? I made a deposit on August 4th for $430. I made a deposit on August 10th for $890. I made a deposit for August 17th for $1,281. I made a deposit on August 28th for $1,670, and then another deposit on August 31st for $400. Okay, so let's go ahead and take a look at my bank statement. Which deposits went through? Or which one am I missing in this case? Right.
30th, 31st.
Yep. So in this case, right, I have my 430, my 890, my 1281, and then my 1670. Right. I have 4 deposits that cleared when I had a total of 1, 2, 3, 4, 5. So I'm missing my $400. Okay. So therefore, I'm going to go ahead and put right here, deposit, okay, $400, okay, so, or in this case, I would put it not here, I would put it over here, $400, okay, $400 deposit, okay, and, okay, what am I going to be subtracting out?
Yes.
Checks, right? Outstanding checks. So let's take a look. I have check number 846, 872, 873, 74, 75, 76, 77, 78, 79, 80, and 81. Okay, so the only thing I have here is that I have check number 846 that hasn't cleared yet. Okay, so let's take a look at my bank statement. Which checks have not yet been cleared?
The 846.
The 846, okay, so the very first one on that list. What else?
Was there a 75?
And 78.
We're missing 75, we're missing 78. Okay, let's see. Let's take a look at my check register one more time. So again, 846 for $320 is missing. Okay. We said you said 75 is missing. Let's see. We have 72, 73, 74, 75 is missing because we have 76.
78.
78 is missing. 78 is missing. Okay.
80, 81.
80 and 81. So we have a total of 5 checks that are missing. So let's go ahead and list them out one at a time. So check number 846 for 320. 846 for 320. We have check number 875 for a total of $49.21. 875 for $49.21. Okay, for 875. We have check number 878 for $275. Right? 275. 275. Okay, check number 878. We also have check number 880 for $401 and check number 881 for $186.50. So 401, $186.50. So 401, $186.50. So in this case, how much in grand total? Maggie, can you mute your mic? So how much in grand total of outstanding checks do I have? Maggie, can you mute your mic, please? Thank you. All right, so there we go. How much outstanding checks do we have to subtract?
5.
In grand total, the total cost.
1,231.71.
Okay. All right. Anybody else got the same answer?
Yes.
Okay.
I'm not done counting.
Okay. So 320 plus 49.21 plus 275 plus 401. Okay.
Yeah, I got the same thing now. Sorry.
No worries. So now, right, we finished our bank side, right? So let's go ahead and calculate what my new adjusted ending balance is going to be. If I started with $24,594.72, I'm going to add $400 and I'm going to subtract $1231.71. All right? What is going to be my total adjusted ending balance?
23,763.01.
Okay, let's see if everybody else got the same answer.
22,963.01. Now I got 22,963.01.
So 23,769.01 you said?
763.
763. Okay, okay. Anybody else? Can you double cut? Oh, yeah, it's 63. 01? Everyone got this?
I got it. Yeah.
Perfect. Okay. So that doesn't mean that we stop here, right? We still have to keep going and check to see if our cash matches on our end. Okay. So let's see. Let's take a look here. Let's go ahead and find out what our cash ending balance in our cash ledger is. So here's our cash ledger, right? It tells us that on August 31st, we should have a grand total cash in our account to upbeat to this much right here. So how much is that one? 23,995.79. Okay. 23 23,995.79. Okay, that's what we're going to start off with. What are we going to add?
Add interest and ACH.
Okay, so right here, interest and ACH is up down below. We have ACH for $550, and we have interest for $1237.22. Okay. Okay. So ACH was for $550, and my interest was for $1237.22. Okay, so in grand total, how much is am I going to be adding to my bank account? $1,787.22.
22. Yes.
Yep.
Okay. All right. So that's how much I'm going to add. Okay. And then what am I going to be subtracting out?
Your fees.
My fees. So let's take a look at my fees. Okay. So I have quite a few fees here, right? I end up, okay, getting a service charge for $50. I get charged a return check fee for $10. And here I actually got a return check number 195 for a total of $850. So in this case, this is what I mean by you're gonna if something doesn't go through, it's gonna notify you at the very top of what you got charged for. So in this case, I got a return check for $850. That means a customer must have sent me a bad check because we have a check number 195, which isn't part of our system. So that means someone's check bounced. Okay? So I got 50, 100, and 850. Sorry, I said 100. So in this case, service charges was $50. The return fee was $10, and the return check was for $850. So in this case, how much is my grand total in amount of fees?
910.
$910. Okay, so in this case, let's go ahead and add my calculate my ending adjusted balance. Okay, if I started out with my account were 23,995.79, I'm adding 1787.22, and I'm subtracting 910. So what's my grand total adjusted balance?
24,873.
24,873.
And 1 cent.
Okay. In this case, do my ending balances match?
No.
No.
No, that means I have more left. Okay? Let's calculate what the difference is. What's the difference between the 23,763.01 versus the 24,873.01?
$1,110.
$1,110. So I'm missing $1,100. Wait, $1,110. No, I don't know. Okay, I'm missing $1,100. Okay, so I have to actually look for it. So let's take a look. Let's go ahead and take a look at my cash ledger, see, so we can follow along, okay? So usually your beginning balance should match your beginning balance in your bank statement. So in this case, right, when I started as of July 31st, I should have $20,406.50. Let's see. In my, right here, okay, I have 2720. Okay, hold on. Minus the 320. Okay, so again, if you add that, you would have 27, 26.50. Yeah, that should be correct, right? So the first thing here is we subtracted out $320, right? Did that clear in our bank for the $320?
No?
For the $320, okay? That was something that has not cleared yet, right? And we know that because that is something that was the first check that we wrote out that still hasn't cleared yet. So we already acknowledged that that hasn't been taken out yet. So we had to add it. We had to subtract it out from our bank account. So we already did that. That was correct. Okay? So then, next thing is I deposited $340. Now let's check. Did I actually make a deposit for $340?
No.
No. I deposited $430. So let's check my deposits real quick. Okay? Here we go. It says right here that I had $430, and therefore I deposited $430, and the bank recognized that I actually deposited $430. There's no way in any circumstances you would go to the bank and deposit $340 when the bank shows that you deposit $430. So in this case, you made a mistake in your own books. So in this case, right? What's the difference between the $430 and the $340?
$90.
$90. Now, in this side, right, my books are incorrect. So am I going to be adding it into my books, or am I going to be subtracting it out from my bank?
Adding it?
You're going to be adding it because you made your mistake here that you put $90 less, right? Because you deposited the money. So in this case, right, therefore you need to increase your bank account. So, or increase your check ledger because you wrote it in for the wrong amount. So in this case, right, the bank already knows because it already cleared for the correct amount. But on your side, you need to add that money back in there. So in this case, you're going to go ahead and put in deposit for the $90 difference. So in this case, you're going to increase your cash side because you did not put in $90. So in this case, I need to change this amount by $90. Okay? So what is that? 90. So 790. Let's make this 7. Let's make this 18. 1877. So in this case, that means it will change my number by $90. So in this case, 9 plus 7 gives you 6, gives you 9. right? 24,963.01. Did that make any difference here?
Yeah.
I still have a discrepancy, right? So
Yes.
what's my difference now? Now that I added $90 to my cash
12,
side,
1200.
I have exactly $1,200 that I'm missing. Okay, so let's go ahead and try to find where that $1,200 is. Okay, so then on August 2nd, I wrote a check out for $50. Is that true? Yes, that is true. Okay, so that's good. All right. Next, then we have August 9. I had a deposit of $500 plus the $389, which let's take a look at my deposit. So here it is. So I deposited a total of $890. Did that go through? Yes, it did. Right? My deposit for $890 went through. Okay. So then here I wrote a check out for 150 and another one for 20. Okay. So did that clear? 150 and 20? Yes, it did. Okay. So then here I deposited 431 plus 850 plus 545. Okay, let's check that out in my deposits. Okay, so here's my 430 plus my 850 to give me a grand total of 1281, and then here's my 545. So this one is in the second deposit. So in this case, did my deposit for 1281 clear in my bank? Yes, it did. Okay. So I have my 541, 550, 545 pending. Did I write a check out for $49.21 and $200? In this case, my check $49.21 was one of the checks that has not cleared yet. But did I write my check out for $200? Let's see in our bank statement. Yes, it has cleared. Okay. So let's see, what else are we missing? Okay. I have another deposit for $500 and then $625. So let's take a look at that. So here is my deposits. There you go. The 545 plus my 500 plus my 625 gave me a grand total of 670. Did that clear? Yes, it did. Okay, so that means that is good there. Okay. Let me see what else happened. Okay. Did we write a check out for $560? Did that clear? In this case, yes, it did clear. Okay. All right, so let's see. So $560 was the last thing I was on. So here, I also deposited $575. And did I do that? No, I didn't. The last deposit was $400. Okay? So that means, which I already know, this deposit didn't even clear yet because this was one of the deposits I had to add back to my bank. So in this case, this $575 was never recorded. Okay? So I'm going to highlight this. Okay? Did I write a check for $275? Let's see. No, I did not write my check for $275, but I did recognize it in my check register that that's one of the checks that has not cleared yet. So that means I'm good to go there. Okay? And then I ended up depositing another $625, which I know isn't true because the last deposit I have is for $400. So in this case, let's calculate this. What is 575 plus 625?
1,200.
Exactly 1,200. The $1,200 that you are missing. In this case, does the bank know that we have this cash on hand?
No.
The bank does not know we have this cash on hand. So in this case, that's exactly what I'm going to do here. It's assuming that you're going to make a deposit. So cash on hand for the $1,200. And of course, that was the discrepancy we were looking for. So if you add the $1,200, you should get this exact number here. So 12 brings this 9. This brings it 24,963.01, and 24,963.01 matches on our cash side. So we had a few things here, right? We're missing a deposit, right, for the wrong amount. Right, a wrong amount deposit for $90, and we had the cash on our hands for $1,200, which the bank did not know we had, right? We're going to assume that we're going to make that deposit later on. So in this case, that's how we do the bank reconciliation. All right. Any questions in regards to this? So this is a little more trickier one. This is a real life scenario when you do have these discrepancies, when you make mistakes on our end where we write something in our ledger incorrectly, or if things that we didn't record, right? Maybe we put that cash on hand on purpose, right? We saved it for something else, right? There's many reasons that we didn't record many things. Now, what we can guarantee is that the bank is the least likely to make a mistake, okay? Because they're a corporation, right? They only record what they see, okay? So it's very, very unlikely that the bank would make a mistake, so they're more likely to be more correct than you would because, again, human errors, right? We typed in that we did $340 instead of $430, right? Humans make up 95% of all accounting errors, okay? Because we're the ones that's inputting the numbers. So it's very rare that 5% is actually due to either Excel or program, okay? So with that being said, any questions in regards to a bank reconciliation?
No.
Okay.
No.
Okay. Any other questions? Okay. So again, your exam, I'm going to keep it short, sweet, and simple because we have another chapter full of calculations. Chapter 11 is full of calculations. So for this exam, I'm only going to test you on your do's and your ifs. So deposits and transits and outstanding checks and your interest as well as your fees. No cash on hand, no written wrong amounts in any of this, okay? It's going to be pretty short, sweet, and simple. Okay? All right? Okay. Well, it is now 11:30, okay? So once again, just another reminder, I'll put it on the Google Classroom as well.